Hello, we are going to be starting chapter 3 now. In chapter 3, we're going to talk about the beginning of the counting cycle, what the counting cycle means, and how that all works. The first thing we need to know is that the counting cycle is actually 1 year. It usually is January 1st to December 31st, but it can actually start and end anytime. A lot of city governments, schools, things like that actually start July 1st and end June 30th as their fiscal year. So really, no matter, it doesn't really matter when you have it, as long as you have your accounting cycle and your fiscal year for a year, then you can pretty much start it and end it at any time. Normally, usually, like I said, July 1st to December 31st, depending on what you do. This is where it takes place. Everything takes place over our accounting period. We have our normal procedures that we do and all those kind of things. And then we usually do our end of the year reports at the end of that fiscal period. So your accounting period, like I said, covers the reports. The income statement also can be quarterly, monthly. The balance sheets can be monthly, quarterly, but you're going to see that most of the time they are yearly, except for the income statement. A lot of times they'll do that by quarter. To help us do this and kind of format this, we use what's called a general journal. A general journal is just a form where we usually put all of our transactions into it. And in this form, we'll be able to identify them as which accounts are debit and credits, which accounts are used, things are in chronological order, and then it is transferred to ledgers where we end up posting it. But the general ledger is the original book of origin entry. You're going to see that a little bit. And it's really a way to put all your entries into one place and know what's happened. No matter whether you're using computerized accounting or doing it by hand, you're going to have a general journal. The journals go right along with our chart of accounts. Earlier, we talked about our chart of accounts. We talked about we have assets, liabilities, owner's equity, revenues, expenses. In our chart of accounts, we assign each one of those numbers. We had briefly talked about this in chapter 2, but assets all start with a 1, liabilities all start with a 2, owner's equity is 3, revenues are 4, and expenses are 5. And you'll see in this example that they actually go like 111, 112, 114. They actually could go 1,110 if they wanted to. Liabilities could be in the 2000s, but everything in a liability is going to start with that 2. And it goes right along. And this is even be more essential that we have those account numbers as we go through posting. When we go to our journals, we put our entries in, it's called journalizing. And so you're going to be journalizing a transaction. Some key things to remember. These are very essential. And most of the time, as we're doing it with our computers, they'll do it for us. But your debit portion is always recorded first. You always record your debit first. Your credit is always indented. That's how you know that's the transaction. So if you have more than one debit in a line, in an entry, you're actually going to list all those debits first, and then you'll list the credit. If you have more than one credit, you list the debit, indent all the credits in, and place them below the debit. There's usually an explanation that follows the credit that pretty much says, this is why we did this entry. Sometimes they'll say paid utilities for July. It may say paid rent for July, paid salaries, accounts receivable for services done, whatever it might be. But each transaction is going to affect at least 2 accounts, and your debits and credits have to equal. So you're going to at least have at least one debit and at least one credit when you're doing this. So when you journalize, it's going to look just like this. It's on your computer screen. You have where it says the general journal. This transaction is May 1st, 2000. Mel Baus began his business investing $10,000 in cash. So again, this is the owner's equity. This is a transaction that we've already done. First thing you're going to ask yourself is, what is the debit? We are investing money into it. So that means we are putting cash into it. So debit is going to be cash. So we write that. And then we put debit as a 10,000. The other thing that's very important is that you put the date, the year, and then the month, and then the date that it happens. Again, these are done in chronological order, so you want to make sure that you have them, the first transactions that happen the first, the second, the third, and how that goes down the line. And then you would list your credit and then put your credit amount in. Okay, so always do the year, the month, year, and date. When it is actually the debit, then the credit, and then you have the explanation and debit and credit over here. This PR column is called our post reference column, and we're going to use that when we start posting our items to different accounts. So this is another example. If we actually, where you have two credits, you purchase computer equipment from Ben Company for $6,000, paying $1,000, promising to pay a balance within 30 days. So basically what you did is you bought it for $6,000. I gave them $1,000 down payment, and I'm going to pay the rest within the next 30 days. So your debit is going to be your equipment. You're going to have cash, and you're going to have accounts payable. You can notice there that both of those are credits, and you have one debit, two credits. These two are indented. And then that way you can show that it happened the first of the month too. Here's for rent in advance, prepaid rent. Here's computer supplies on account. So you can kind of see how these all work. Your debit's always first, then your credit. And these slides are really good for you to go through when you're doing your homework to make sure that you're doing it correctly also. So I had mentioned that one thing we were going to do is after we did our journals, we have to do some what's called posting. And posting is taking the information from our journals and putting in our ledger. You guys have already posted when we went to our T accounts, basically, and we took our balances of our T accounts. So what basically it does, Posty does, is that you have your general ledger, this is a sheet of document that has all your transactions. And so we may have cash written down 20 times on the sheet of paper. So it's really hard to go in and figure if we're increasing or decreasing cash, what the balance is going to be. So what posting does is it allows us to put it on a ledger, which is like basically a T account, but it's a ledger, and allows us to put all of the cash entries on one sheet, then all the supplies on the next one, and you just go down the line where you have a running balance and can see what your account is. This is very helpful when you want to know how much money, when you go to do your trial balance and those kind of things. So in the ledger, the debit accounts are recorded and the amount entry. Then you're going to go and you're going to record the credit amounts. You'll notice that in the post reference, that PR, you would put general journal 1 because it came from the general journal, page 1. And then you would, back on your general journal, you do what's called cross-referencing, and you'd actually put in the account number. So if it was cash, it would be 111 was what you would put in there. So this is what it looks like. And I know this is kind of small, but we have our general journal here. We had cash for a debit of $10,000. So we come to our general ledger, we come to the cash account, we put the date in there. We're going to put the same date that's up here. Even if it's 2 days later, you're going to put the same date. Then on post reference, you need nothing in the explanation. On post reference, you're going to put general journal, GJ, page 1. This is page 10. You put GJ 10. It doesn't matter on that part. You put that there. Take your debit. You put your debit in there. And then here's your balance column. So if you have 10,000 here, you have 10,000 there. If I had another transaction that had cash, let's say on the 5th, G1, and we had a credit of 1,000, if I have 10,000 as a debit balance, I have 1,000, or take away 1,000, that would be 9,000. So this balance column right here is actually going to be a running total balance for you. So you have one place to look, you know what the balance is. Then we're going to do then we're going to come back up here and put our account numbers 111. We're going to put it up here. So we know that we post referenced it to there. It's very important that you only put your post reference in your journal after you have posted it down here. Then you won't lose track. You know you did it. All those kind of things happen. For capital, we would do the same thing. We would type in we'd put the date, GJ1. It's going to be a credit of 10,000 and then 10,000 over here. And then we're going to take our post reference and put it back up there. Cross-referencing is just post-reference column that tells us which transactions have or have not been posted. It allows us to know where that transaction should be if we're looking for it. So it just makes things a lot easier for us to go back and check. The trial balance then we have done before. You're going to list all the individual counts and the balance from their ledgers. So you're going to look at the counts and you're going to go which ones have a balance, what their balance is, and that's what you're going to use. And you shouldn't have to do any adding and subtracting once you go to do the trial balance because you should have it all done in your ledger already. Sometimes mistakes can happen in a ledger. Sometimes we transpose or slide errors, which means if it is 36, you put 63 accidentally. Or one that's really common is it was 360 and we put 36, we dropped that zero off. Those kind of things do happen. Sometimes we have posting error. When we transfer that money back and forth, we don't do it. So that's an easy way too to say, okay, I want to go through each of my transactions and make sure I did the exact same numbers. Okay. What to do the trial balance doesn't. These are things to remember, and this is something I want you to flag. They are listed in the book that kind of keep this stuff information. What if it doesn't equal? One, it could be the thing you need to do is you need to check how far are you off? How far are your debits and credits off? If you're 10, 100, 1000, it's just a mathematical error. You need to re-add again. And that's why I always tell everyone to add up their columns twice before you even say that it's wrong. If someone come to me and say my debits and credits don't equal, and I go, did you add each column twice? If they tell me no, then I won't even help them. They need to add them twice to make sure that that's there. If the difference between your debits and credits is equal to an individual account balance in the ledger, check that out, see if something was done incorrectly. If it can divide by 2, and then see if the debit should be a credit, that is if it's evenly divided by 2, okay, or vice versa. If the difference is evenly divided by 9, it's a slide or a transposition. That means your numbers were accidentally rearranged or you slid one off. You need to compare the balances in the trial balance with the ledger accounts to make sure you copied them over correctly. That's almost the first thing I want to do. You can do add the balances again, and then maybe trace all postings and see that. But the first time I have an error, besides I tell you to count add up the columns twice, I usually have you check your balances and make sure you transpose them over correctly. You also can make corrections, and this is a very good spot if you do find a mistake. This should have been accounts payable instead of accounts receivable. They just initialed it, and so you just make those changes. This should have been 25 instead of 52, so you just cross it out and make that change. In the computer world, when we do it like with QuickBooks, you just do a reversing entry basically. So for this here, you would take it out of accounts receivable and put it in accounts payable is what you would do. And that's something we'll talk about at another point in time. If you've already posted, again, you'd have to go to your general ledger and make that mistake and make those changes. Make sure that you initial them. And putting stuff in a wrong account, that's kind of the same thing. You can just kind of see how they did things there. So one of the most important things on here is to take your time to add your numbers up twice. Make sure that you are putting the right numbers where they're supposed to go and taking your time on that. So this week you have a assignment in My Accounting Lab. On Wednesday, your vocab activity is going to open up. Make sure you complete that by Sunday night. Both those items are due on Sunday. And then next week you will have some more work with this. So please let me know if you have any questions. I'm here to help you. Have a good week.